Ladies and gentlemen, Energy Guy here. I want you to look at $59.73 on your screen right now. It is Tuesday, December 30th, 2025, 3:47 Eastern Time. That number you're seeing, that's WTI crude oil, below $60 for the first time since 2021. I know exactly what you're feeling right now. You're thinking, finally, cheap gas. This is great news. Stop. What happened in the last 18 hours is not just a market correction. It is not supply and demand finding equilibrium. It is not OPEC losing control. What you are witnessing is the opening move of an energy blockade that will reshape the Western Hemisphere before New Year's Day. If you don't understand this now, you're going to wake up on January 2nd, 2025, and it will be too late. Because while everyone is celebrating lower pump prices, Donald Trump just activated a weapon that hasn't been used since the Cuban Missile Crisis. And the target isn't Russia, it isn't Iran, it isn't even China. The target is 900,000 barrels per day sitting off the coast of Venezuela right now. This second. Venezuela didn't change its production overnight, OPEC didn't announce new cuts, global demand didn't collapse, but oil crashed 23% in 72 hours. Why? Because the largest buyer of Venezuelan oil just got a phone call from Washington. And that phone call said 3 words: cut them off. Let that sink in for exactly 10 seconds. We have 48 hours until this becomes irreversible. What you are witnessing is not a normal market sell-off. It is not traders taking profit before year-end. It is not concerns about global recession. Venezuelan oil production did not suddenly change. They're still pumping 900,000 barrels per day. OPEC plus quotas did not suddenly change. They're still restricting 2 million barrels daily. Chinese demand did not suddenly change. They imported 11.3 million barrels per day last month. What you are seeing is a financial blockade disguised as a market event. Here's what the mainstream media is telling you. Oil prices fall on economic concerns and oversupply fears. That's the headline on Bloomberg, on Reuters, on CNBC. They're showing you charts. They're interviewing analysts who talk about technical levels and resistance zones. But not one of them is telling you about the executive order signed at 11:47 p.m. on December 28th. Not one. The order is buried in 47 pages of legal language about national security threats and Western Hemisphere energy stability. Page 34, Section 12, Subsection C states, any entity engaged in the purchase, transport, or refinement of Venezuelan crude oil products shall face immediate sanctions under the International Emergency Economic Powers Act. Do you know what that means in plain English? It means every tanker, every refinery, every trader, every bank, every insurance company, cut off, sanctioned, frozen, within 48 hours. So who is dumping Venezuelan oil right now? Who is selling before the deadline hits? China. Not because they want to, because they have to. China has been buying 540,000 barrels per day from Venezuela. That's 60% of Venezuela's total exports. They've been using it to fill their strategic petroleum reserve. They've been blending it with Saudi crude to stretch their supply. It's been the perfect arbitrage. Buy sanctioned oil at 15-20 discount to Brent. Process it, use it. Nobody cared. Trump was out of office. Biden looked the other way. The oil flowed until 72 hours ago. Because Donald Trump just told China, you want a trade deal, you want tariff relief, you want to avoid a tech war escalation, then you stop buying Venezuelan oil. Today. Right now. This instant. And China looked at $540 million in daily oil imports versus $600 billion in annual trade with the United States. And they made a choice. They chose America. So right now, there are 17 very large crude carriers sitting in the Gulf of Paria loaded with 33 million barrels of Venezuelan oil. And they have nowhere to go. China won't take them. India is watching. Turkey is nervous. And the global oil market is watching this standoff and asking, what happens to 900 barrels per day of supply if nobody can buy it? The answer is already on your screen, $59.73. But here's what they're not telling you. That number is about to reverse. Let's do the math together. Get your calculator out. Venezuela produces 900,000 barrels per day. If the blockade holds for 30 days, 900,000 barrels a day, 30 days equals 27 million barrels removed from global supply. Current global consumption, 102 million barrels per day. That's a 0.88% supply shock. You're thinking less than 1%, that's nothing. Wrong. Oil markets don't price linearly, they price exponentially at the margins. In 2008, when supply dropped 2%, prices didn't drop 2%. They spiked 140%. In 2020, when demand dropped 9%, prices didn't drop 9%. They went negative. Because oil is the most inelastic commodity on Earth. You can't turn off refineries, you can't ground planes, you can't stop trucks. The entire modern economy runs on 102 million barrels per day, moving through the system like clockwork. Remove 900,000 barrels, that's 37,500 barrels per hour that have to come from somewhere else. From where? OPEC is already cutting 2 million barrels per day. They're not going to increase production to replace Venezuelan barrels. That would defeat the entire point of their cuts. U.S. shale? Maxed out. We're at 13.3 million barrels per day. It takes 6 to 9 months to drill new wells. Norway, Canada, Brazil, they're producing flat. There is no spare capacity to replace 900,000 barrels per day. Let that sink in. While you are paying $3.12 at the pump in Texas right now, Venezuelans are paying 2 cents per gallon. That's not a typo. 2 cents. That's a $3 spread on the same commodity. Venezuela has the largest proven oil reserves on Earth, 304 billion barrels, more than Saudi Arabia, more than Canada, more than Russia. But their people are starving while sitting on $25 trillion worth of oil at current prices. Why? Because they can't sell it. They can't refine it. They can't move it. Their refineries are operating at 11% capacity. Their wells are flooding because they don't have the parts to maintain them. Their tankers are rusting in port. And now the one customer who was willing to buy their oil, China, just walked away. This isn't just an economic crisis. This is existential. Here's what they don't want you to know. Venezuelan oil is trading at a $22 discount to Brent crude right now. Brent is at $63. Venezuelan oil is effectively $41 per barrel. But the cost to produce that oil? $8 per barrel. That's a 33 margin per barrel. That someone is capturing. Who? The middlemen, the traders, the shell companies, the tanker operators. They buy at $41. They blend it with other crude to hide the origin. They sell it at $63.22 profit per barrel, times 900,000 barrels per day. That's $19.8 million per day in pure arbitrage, $594 million per month, $7.1 billion per year. And Trump just said, that ends now. Not because he cares about Venezuela, but because he cares about leverage. Every barrel of Venezuelan oil that China buys is one less barrel of American LNG they need. Every dollar Venezuela earns is one more dollar that doesn't flow through U.S. banks. Every tanker that docks in Maracaibo is one less reason for Maduro to negotiate. Trump looked at that equation and decided, cut the supply, control the leverage. This isn't the first time. Let me show you. October 1973, OPEC cuts oil exports to the United States. Result, oil prices quadruple from $3 to $12 per barrel in 6 months. Gas lines, rationing, economic recession. 2008, Libya's civil war removes 1.6 million barrels per day. Result, oil spikes to $147 per barrel. 2019, drone attack on Saudi Aramco removes 5.7 million barrels per day for 48 hours. Result, oil jumps 15% in a single day, the biggest one-day spike in history. Every time, when supply gets removed suddenly, the market overreacts. Not because of the actual shortage, but because of the fear of shortage. Right now, we're in the fear phase. Oil is crashing because traders think Venezuela is sanctioned, China won't buy, that's bearish. They're wrong. They're looking at supply being sanctioned and thinking it means supply is increasing. It's the opposite. Sanctioned oil doesn't magically disappear. It just gets locked up, frozen, unusable. It's like having a full gas tank but the fuel line is cut. The gasoline exists, but you can't access it. And when the market realizes that 900,000 barrels per day just got locked in a box, that's when the real move happens. We are staring at the clock. It is exactly 48 hours until the executive order takes full effect. January 1st, 2025, 12:01 a.m. Eastern Time is not a vague prediction about sometime next year. It is a legal deadline, a contractual cutoff, a point of no return. Do you really think Chinese oil traders are going to be buying Venezuelan crude 12 hours before they face U.S. sanctions? No, they are dumping. They are liquidating. They are front-running the deadline because they know that on January 1st, every barrel of Venezuelan oil on their books becomes a liability. They can't sell it, they can't refine it, they can't move it, so they're selling now, at any price, to anyone who will take it. And who's buying? The United States Strategic Petroleum Reserve. You heard that right. While China dumps Venezuelan oil at $41 per barrel, the U.S. is quietly buying, filling the SPR at the cheapest prices since 2020. And when the deadline hits, when that supply is locked off, the U.S. will own the cheapest barrel in their reserve while the market scrambles to replace 900,000 barrels per day. We could see $75 by January 10th, not because demand increased, not because OPEC cut more, but because the market will wake up and realize that supply is gone. This is why I titled this video Danger in 48 Hours. Not because I'm bearish. I'm more bullish than I've been in 3 years, but because the transition we're about to make is violent. Here's what's going to happen in the next 2 weeks. Phase 1, now, Deck 31, panic selling. Venezuelan oil dumped. Prices crashed toward $55. Phase 2, Jan 1-3, deadline hits, supply locks up. Market realizes the shortage. Phase 3, Jan 4-10, scramble begins. Buyers looking for replacement barrels. Prices spike toward 75 to 80. Phase 4, new equilibrium. Either Venezuela negotiates or prices settle higher permanently. The trap is in Phase 1. Everyone who is shorting oil right now, thinking this is the big collapse, we're going to $50, they are about to get destroyed. Because when Phase 2 hits, when that supply disappears, the short squeeze will be biblical. And the people who are over-leveraged, who are betting on lower prices, who think this drop is the beginning of a bear market, they will face margin calls, forced liquidations, catastrophic losses. This is the exact opposite of what happened in 2020 when oil went negative. In 2020, we had too much oil and nowhere to store it. In 2026, we're about to have too little oil and no way to replace it fast enough. You have 48 hours. 48 hours until the executive order takes effect. 48 hours until 900,000 barrels per day gets locked away. 48 hours until the market realizes what just happened. I'm not telling you to buy oil futures. I'm not telling you to short oil. I'm not telling you to invest in energy stocks. I'm not a financial advisor. This is for informational purposes only. But I am telling you, if you heat your home with heating oil, if you drive more than 50 miles per day, if you run a business that depends on fuel costs, you need to ask yourself today, am I prepared for energy prices to spike 30% in the next 10 days? Because in 48 hours, when the deadline hits, when China confirms they've stopped buying, when those 17 tankers have nowhere to dock, the answer will be, it's too late to prepare. The move already happened. Trump knows exactly what he's doing. This isn't chaos. This is strategy. He's not trying to lower oil prices. He's trying to control the flow. He's not trying to help Venezuela. He's trying to pressure Maduro into negotiations by cutting off his revenue. He's not trying to hurt China. He's trying to force them to choose between Venezuelan oil and American trade. And the leverage? The weapon? It's the 900,000 barrels per day that's about to disappear from the market. This is energy geopolitics at its most raw. This is the game behind the game, and most people won't see it until it's over. They'll wake up on January 5th, see oil at $78 and think, wow, that was random. It wasn't random. It was calculated. It was telegraphed. It was inevitable. The information was out there. The executive order was published. The deadline was clear. But most people won't look. They'll watch the headlines. They'll listen to the analysts. They'll believe the narrative. And they'll miss the biggest energy move of 2026 happening right in front of them. This is Energy War Decoded. I've given you the data. I've shown you the timeline. I've explained the mechanism. What you do with it is up to you. Do your research, but do it now. Because the clock is ticking, and in 48 hours, this window closes.